Hi there, Serial Trader here. I'd like to have a look at the major US indices heading into next week and obviously the new year, new quarter, new month, all that. And Happy New Year. But since the last video, okay, so we did get an upside move after holding the key levels here on SPX, and the key low to hold was that 44.95 area. So we did a deep pullback, still made a higher low, and now we've had a good move up, made new all-time highs. So largely in line with the game plan I presented last time. So if you caught a piece of this move, then that's great. If not, I think we have another setup coming here. Well, maybe even a couple, depending what you want to do. Now, in the last video, I proposed that maybe we had this one, and that this was our wave 2, okay, of perhaps the larger wave 5, and that within that we were doing the 1, 2 of the 3 to come. Now that's still possible, but I'm starting to lean more towards this overall wave 2 not being completed yet, despite making new highs. And what would accommodate that? Well, it would be an expanded flat or a running triangle, and that's where you can make a new high or a new extreme, even though the actual corrective pattern is not fully completed yet. So that'd be some sort of corrective move down for an A wave, and then we got a 3. So what grabs my eye is this 3-wave move up so far. I mean, it could still turn into a 5, but currently we have a 3-wave move up to a new high, and it looks like we're reversing and perhaps starting to head back down here. So that always gets my attention that, okay, maybe we just got the A, 3 up for the B, and then we're going to have a fairly swift move down in a C wave for an expanded flat for this larger wave 2, okay? And I suspect if this is the scenario, we'll consume at least part of January going down before we set up the next potential long entry to get ready for this actual third wave move to come. Okay, so overall, I'm not expecting the huge crash that will probably come at some point, but I am expecting a little bit of a shakedown, shake the tree, if you will. Before we set up the next long entry, and obviously can only really stay overall bullish here if we hold, as long as we hold these early October 21 lows. As long as that holds, I view this all as a potential corrective pattern setting up the next long trade. Now, a couple things. If you want to try and play this C wave, you can certainly at this point trade against this high. So 48.08 on SPX, just about 48.09. You can be short against that level since we've started backing off somewhat convincingly from there. Or you can just simply wait, let this develop. Now remember, if it's an expanded flat, the objective is to go below that prior A wave low. If it's a running flat, you would come down here but make a higher low. If somehow, now I don't know, it wouldn't fit very well into the overall structure, have to rethink some things, but if this is somehow a running triangle where you get the A, B, C, D, E, again, you'd only be looking for a higher low and a little bit more sideways consolidation before moving up. But I think there's a decent chance of getting a running flat. That would, to me, be the most satisfying, because you basically went up. It typically does the most damage to the most number of market participants, because you went up in here, made a new all-time high, so anyone that was trying to short against the old all-time high got stopped out there. And anyone that's long against this low here, that early December low, if we go down and spike that low, all those people will get stopped out, and then we finally get the big move up and leave a lot of those people out, because a lot of them will not get back in time. Some will, but lots won't. So as far as like the max damage scenario, I do like the expanded flat, but that doesn't mean it has to happen that way. Okay, another thing to kind of support this. So even though we've made a 3-wave move up to a new high, you can see we've certainly made a divergent RSI, in that we made a significantly lower high in RSI compared to the higher high in price. So that kind of makes me suspect of immediate upside potential. For instance, if we were in the more bullish, okay, we got the 1, 2, and we just did the 1, 2 of the 3, and we're in the wave 3 of 3. I mean, that should be moving very quickly, be very powerful. And if we just start declining more here, that really, I think that scenario really comes off the table. I mean, we could find support immediately and just keep going up here, but I'm suspicious of that scenario currently, and I'll get into some other reasons why in a bit. For instance, the NASDAQ did not make a new high, and that sort of thing. So you got some divergences there among the indices. Okay, so basically bottom line, where's the trade currently? Well, if you want to try and catch some downside, I would be using that recent all-time high as your kind of level to trade against. And if you want to catch the next long, I would just wait for this downside move to unfold and then reassess once there's more information. Okay, but overall, still looking for higher levels on the larger time frame. I mean, to put it more simply, I do not think that this high we made at 48.08 is going to prove to be the absolute high of this bull market. Let's just put it that way. Okay, we'll probably move off of this, head over to the Thinkorswim charts, and we do have a bearish engulfing candlestick as of Thursday, and then we had some downside follow through on Friday, closed near the lows of the day, so that's good to see. You can see we're overbought on this oscillator, starting to cross down below, so that's supportive of some downside action. And what else do we got here? If I go over to the weekly chart here on SPX, not a very remarkable weekly candle. A little bit of an upper shadow rejecting those higher prices, but I wouldn't call it like a major reversal candle or anything like that. Okay, well, let's head over to some other indices. So looking at the Dow, now the Dow did just spike the old all-time highs, but again, distinctive three-wave move up to a new high, and basically, you know, flushed all the stops that were short against the old high, and looks like we're backing right off from that area. So not a convincing breakout. In fact, it looks like a little, you know, run the stops and pull it back down kind of scenario. So very much like the S&P. Oscillators overbought, looks ready to come down. This is the daily chart. So weekly chart, I think it's a very similar looking candle, just a bit of an upper shadow. Okay, so that's that. Now if we go over to the NASDAQ 100, and we'll look at the NASDAQ 100 and the NASDAQ Composite. So NASDAQ 100 NDX, looks like we have the three-wave move down and a three-wave move up, not even to a new high. Okay, so a little weaker. So again, this could be 3, 3, 5 for a flat, or we could just do 3, 3, 3, 3, 3 for a more sideways triangle in the NASDAQ 100. But definitely looks like we got some downside potential here, and we're already underway. So that's the daily chart, but on the weekly, what do we got on the... Okay, the weekly looks a little more interesting here on the NASDAQ 100. Looks like more of a inverted, a bit of an inverted hammer, so kind of a bearish weekly candle. And if we start trading lower next week, that would be a decent confirmation. Again, just looking for, you know, more of a corrective move down here. Not calling the end of the NASDAQ bull market, but just looking for a little bit of a shakeout here in January before we start going up again. So just keep that in context. Not getting mega bearish here, just on a shorter term basis, a little bearish, that's all. Okay, so the NASDAQ Composite, let's just have a glance at that. Same idea, we had a three-way move down. Now we've had a three-way move up. And the reason why I'm leaning more on SPX to just be a flat or an expanded flat or something like that, as opposed to just we're already in that wave 3 move up, is because the NASDAQ, both the NASDAQ indices here, the NASDAQ 100 and the NASDAQ Composite, the fact that they have that distinctive three-way move up and didn't even make a new high, that to me takes away from the more immediately bullish scenario on SPX. So that makes me weight it more heavily that we have some short-term downside before we actually go back up again. So that's my thought process there. Okay, so Composite, yeah, looking pretty weak. Looks like it needs more downside to finish up this pattern into January. Weekly candle on the NASDAQ Composite. Similar idea to the NASDAQ 100. Looks kind of like a inverted hammer. So a weekly bearish candlestick on both the NASDAQ indices. Worth pointing out for sure. And okay, also another thing, the VIX. So the VIX looks like it's done some sort of move up, right? We had the spike high. Now we've done, to me, what looks like a three-wave decline on the VIX, and not to a new low. okay, which would support another move up in the VIX and another move down in the indices to complete this overall corrective period, we'll say. So VIX, and any volatility traders out there, you can certainly be looking at some long volatility products here into January. I think that could be an interesting play. And we'll go to the VIX VVIX tool, my go-to. And okay, so we have gotten below the blue moving average on SPX. You can see we actually broke below it, kind of hovered underneath of it, and it actually served as resistance as opposed to support as it would on the way up. And now we're backing away from that blue moving average. So on a bit of a sell signal here, but it's not a clean one because VVIX is not actually above the red moving average as it should be. Well, SPX is below the blue moving average, although that could change very quickly on Monday if we, start getting more volatility coming into the market. We should get VVIX above the red moving average and further downside here on SPX, but we will see. Now we have a little bit of a divergence here between VIX and VVIX. Okay, so you had the relative low here on VVIX, and then you had the relative low here a little later on in comparison here, right? So there is a mild but still, notable or at least discernible divergence where VVIX made a new low here and then VIX made its low a little later on, and then you got the decline in SPX. So I would call this kind of a messy sell signal because we are still below that blue moving average, even though we haven't as of yet popped above the red moving average on VVIX. Ideally, you get the divergence between VIX and VVIX, you get above the red moving average on VVIX, and then you get the blue moving average break on SPX, but it just didn't quite happen that way this time. That doesn't mean it's not going to go down some more, though. It just means the signal is a little messy this time. And that's fine. Okay, well, that's probably all there is to point out. So just to put a bottom line on it, I would be looking for some downside, at least into part of January. And then I would be looking for another long setup if you don't want to play the downside, which I don't blame you, because sometimes, there's a downside move, it's hard to capture it because it, in the case of if you're trying to go for an expanded flat, but it only becomes a running flat, or it just becomes a triangle and more sideways, that could be very difficult to capture. Whereas if you're looking for this next, third wave up, which should be a more powerful, longer lasting move, that's easier to get a piece of than perhaps a more short-term downside move. So that's a matter of personal taste, but that's currently what I'm seeing here. All right, let's see what happens next week and this coming year. I think it'll be interesting, and we'll certainly watch the market to give us clues all along the way. Serial Trader signing off.